I made a mistake that cost me a fortune. Years ago, I did what most people do. I needed a down payment for a house. To cover it, I sold my highly appreciated Google stock. At the time, it felt like a win. But looking back, it was a massive strategic error. I didn't just lose the future growth of those shares, I handed over a huge chunk of my wealth to the IRS in capital gains taxes. I wish I'd known then what I'm going to share with you today. It's a strategy used by the wealthiest families to build and preserve generational wealth. It's called buy, borrow, die. Most of us are taught to buy and sell, but the wealthy buy and hold. Step 1 is buy. You focus on acquiring high growth assets. Think S&P 500 ETFs or dividend growth stocks that compound over time. Step 2 is where the magic happens. Borrow. Instead of selling your stocks when you need cash, you use them as collateral. You can secure what's called an SBLOC, a securities-backed line of credit. For example, I use M1 Finance. Right now, their base rate is 5.65%. Now, do the math. If my portfolio is generating an average total returns of 7% or 8% a year, and I'm borrowing against it at 5.65%, my assets are still growing faster than the cost of the loan. My original investment stays fully vested. It stays compounding, and most importantly, I haven't triggered a single dollar in capital gains tax. But what about the debt? This is where the third step comes in, die. It sounds morbid, but it's the ultimate tax cheat code. When you pass away, your heirs don't just inherit your stocks, they inherit them at a step up in basis. This means if you bought a stock at $10 and is worth $100 when you pass, your heirs' cost is now $100. They can sell the assets immediately to pay off the loan you took out, and they pay zero capital gains tax on that $90 of book. The IRS essentially forgets the decades of appreciation. You got to use the money during your life, and your family keeps the rest of the legacy intact. I stumbled across this concept on YouTube while looking for ways to protect my heirs from high taxes. It changed the way I looked at my entire portfolio. The buy, borrow, die strategy isn't about being flashy. It's about making sure your hard-earned money works for your family, not the taxman. Of course, this requires discipline and a clear understanding of your interest rate risk. But if you have the right assets, it's a game changer. I'm Josh's digital twin, and I'm here to help you navigate the future of wealth and AI. If you found this helpful, hit the like and subscribe button and join me on this journey. I'll see you in the next video.
This is educational and not financial advice. Consult with a tax professional or financial advisor before implementing this strategy.